Hi, thanks for tuning in. Last month, I spoke about the landmark case from a Missouri lawyer challenging realtor commissions. Today, I'm going to talk about how it affects buyers and sellers. Now, this change will take effect mid August. Here in California residential real estate, the seller, not the buyer, pays the realtor commissions. Most likely, it's been a 5 to 6% commission. Half of that fee probably went to the listing agent and the other half to the buyer's agent. That's no longer the given. The National Association of Realtors reached a settlement that changes the commission rules. This settlement is seen as a landmark case in the residential real estate market. So, under existing language, a seller's agent must disclose the commission cut for the buyer's agent when listing homes on NAR affiliated multiple listing services. The seller typically pays both sides of the commission. So if a house sells for $1 million and a 6% commission is split between a listing agent and a buyer's agent, the seller loses $60,000 off the top. Now, take note, the buyer still pays the $1 million agreed upon purchase price. The lawsuit against NAR claimed that the commission rule pushed up real estate prices and caused some buyers' agents to steer their clients to homes with higher commission fees. Under the new rule, buyers' agents will no longer see fees on any MLS listing, which means they can't easily steer their clients to properties with higher commissions. Commission fees will be negotiated outside of the MLS. The fees, the split, and who pays for what can all be negotiated, just like they've always been. The difference is nothing can be predetermined in the MLS. Using the MLS to communicate offers of compensation will not be an option, but commission rates will continue to be negotiable. Another new change is that buyers will be required to enter into written agreements that clearly spells out how much the buyer's agent will be paid before touring homes. These agreement forms may startle buyers since they're not accustomed to signing forms before being shown homes. And buyers who use several agents in their search of homes will have to sign written agreements with each of those agents for each house they are shown. According to NAR, these agreements can help consumers understand exactly what services and value will be provided and for how much. Now, a variety of scenarios for buyers will be possible. So let's say buyers may pay their agents directly out of pocket rather than at the close of escrow. Or buyers may negotiate with their agents to pay a commission based on a percentage of the sales price, or it could be a flat fee for all services, or individual fees for specific services, or even an hourly rate. I don't foresee agents wanting to take on hourly fees. Buyers can negotiate payments of their agents' commissions with the sellers as part of their purchase agreement. Or buyers can request seller concessions as a lump sum at settlement for closing costs and use some of it or all of it to pay their own agent. Or buyers may skip altogether of having an agent represent their interests, which is not advisable for buyers who are not completely familiar with California law and real estate forms and transactions. Currently, buyers can't finance their agents' commissions in their loan, which places a burden on them when it comes to coming up with cash if they can't get the sellers to kick in for their commission fee. Now, this will hurt first-time buyers and buyers with low to moderate incomes who already struggle to accumulate the cash for a down payment and closing costs. Luxury buyers and move-up buyers are more likely to have the funds available to pay an agent. Home buyers who finance their purchase with a VA loan are not allowed under the program's rules to pay a real estate agent commission. If sellers don't offer to pay the buyer's agent, BA borrowers may not have representation until the program changes its rules. Consumer advocates such as Consumer Federation of America anticipate that real estate leaders, will push Fannie Mae, Freddie Mac, and the federal housing agencies like FHA to allow buyers to finance their agents' commissions into their mortgage. There are potential impacts for sellers as well. Adjusted NAR practices continue to allow sellers to negotiate the commission to their listing agent. Sellers just won't be allowed to negotiate the commission offer to the buyer's agent. The common practice is that the seller and the listing agent agree in writing what compensation would be offered to the buyer's agent. Now, the new changes may affect the seller's choices in the buyer's agent commission. The seller will feel they may have more choice than before of what to offer a buyer's agent based on current market conditions, the price of their home, and the projected number of interested buyers. So in some cases, a listing agent could suggest the seller's offer to pay the buyer's agent commission as part of their negotiation. Sometimes sellers just don't realize the value of having a good buyer's agent assisting the buyer with their side of the sale. A great buyer's agent can help the buyer navigate through the emotional and confusing aspects of the process. And the big question, what will the new rule do to California home prices? Well, realtor commissions don't drive home prices. Instead, home prices adjust based on property and neighborhood characteristics, as well as mortgage rates and other economic factors. So in the next few weeks, the new language in our residential real estate forms will be enacted. It'll be a learning curve for buyers and sellers, and initially there may be some confusion, but in time it will become commonplace. A good agent will guide their client to the best decision for their own circumstance. Well, thanks for tuning in. Until my next video, take care. And as always, feel free to contact me. Goodbye.